A very good evening to all my dear students. How are you all? How are your preparations going on? The preparation should be in full swing. I expect that you are actually preparing your auditing and ethics subject side by side as and then like with the sessions that we are, the topics that we are covering, you are doing them side by side. I'm expecting that you all are doing this. So can I have replies for this? Gayatri, Kashish, Avijit, good evening. Karan, Nidhi, Khushi, Gupta, Ankita, Amit, Ranjan, a very good evening to everyone. Please tell me whether you all are actually preparing this subject side by side as the sessions are going on. The topics, are you all, keeping it for a later time to learn the topics that we are covering? Chapter number 5, chapter number 6, 7. So everyone is saying that they are preparing the syllabus, they are preparing the chapters for the exam side by side, which is very good. Others who are not doing this, please start preparing this subject with the classes that are being conducted for your advantage only. Okay? Take full advantage of these classes. These are organized only and only for your benefit. No other purpose is there, right? So students, in the last class, we started with our discussion of Essay 560. We have also finished up with Essay 560, which is subsequent events. Then we started with Essay 570, which is going concern. But for going concern, we have just started our discussion. So whatever we have discussed, I'll just recap that quickly, and then the topics that are new, that I'll explain you in detail. So many of you are saying that, ma'am, we are preparing our subject side by side. So that is really very good. If you are doing this, that is going to benefit you only. Okay? So far as Essay 570 is concerned, this is what going concern. Okay? What is going concern? Anyone, any idea what is meant by going concern? That the company can continue its business for the foreseeable future, and the financial statements are based on these assumptions, right? And this going concern is a fundamental accounting assumption. So as such, the disclosure of which is not required, but it is assumed that the company has prepared its financial statement based on going concern, right? If the company is not going concern, the financial statements would have to be prepared on liquidation basis, right? Liquidation basis, we mean whatever the company will realize from the assets or whatever the company has to pay in the near future, that is 12 months. On that basis, the financial statements would be prepared, right? Now, in the last class, I asked you that it is whose responsibility to see whether going concern is appropriate for the particular, let's say ABC is the client. It is whose responsibility, whose primary responsibility to see whether the company is going concern or not, whether the financial statement, whether the use of going concern is appropriate for preparing the financial statement. It is whose primary responsibility? Tell me. It is management, everyone is saying, right? So what is this SA 570 all about? So SA 570 deals with the auditor's responsibility in the audit of financial statement relating to going concern and the implications on the auditor's report. See, you all have studied, you all have, learned about the inherent limitations of audit in SA 200, whereby you have seen that audit is not a guarantee of any future event, right? So since going concern, when we talk about going concern, we basically mean to say that whether when we are talking about going concern, we basically mean to, see whether the financial statement that have been prepared by management on going concern basis, whether that basis is appropriate or not, right? But let's say the company has prepared the financial statement as on 31st March 2025 on going concern basis. The auditor has signed the audit report on, let's say, 31st July 2025, right? In the month of August, let's say that company is hit by a tsunami. So is it in the hands of the auditor to guarantee the going concern of a company? The answer is no, right? So yes, SA 570 contains the responsibility of the auditor with respect to going concern. But see, a very, very important paragraph. It says that, however, as discussed in SA 200, the potential effects of inherent limitations on the auditor's ability to detect material misstatements are greater for future events or conditions that may cause an entity to cease to continue as a going concern. The auditor cannot predict such events or conditions. Accordingly, the absence of any reference to material uncertainty about the entity's ability to continue as a going concern in an auditor's report cannot be viewed as a guarantee as to the entity's ability to continue as a going concern. So if nothing is mentioned in the audit report about going concern material uncertainty, auditor cannot be as such held responsible. Why? Because we all are aware about inherent limitation of audit as given by SA 200, right? So if we talk about the responsibility or the objective of the auditor in terms of SA 570, first of all, he'll conclude or he'll obtain sufficient appropriate audit evidence with respect to the appropriateness of the management's use of going concern. Okay, whether if management has prepared the financial statement based on going concern, whether that basis is appropriate or not, right? Then he'll also assess whether there is a material uncertainty about the entity's ability to continue as a going concern. Let's say the company is having its business, let's say, with Iran, and now there is material uncertainty that, or let's say any country which is nearby Iran, which as such is not affected by the war, but there is a material uncertainty that about what, whether the entity will be able to continue its future in the foreseeable future, that is the 12 months, right? And once he is aware about the, or he obtains sufficient appropriate audit evidence about the entity's ability to continue as a going concern, about the material uncertainty, not only that, how to report about that going concern matter, with about the material uncertainty, that is also a very, very important part of the objective of the auditor as is given by SA 570, right? Is it clear? So I remember that till here we have already covered in the last session. And now it says that SA 570, it says that when auditor is performing the various risk assessment procedures, what are the various risk assessment procedures? Anyone, any idea? Can I expect any answers from you for the risk assessment procedures? You all must have done these procedures in your earlier chapters. Risk assessment procedures. Tell me. Anyone, any idea about this? Risk assessment procedures. The essay number is written on the screen. Otherwise, I would have asked you the essay number first. It is essay 315. Tell me, what are the various risk assessment procedures? Anyone, any idea? Anyone, any idea? Inquiry, observation, Anil, absolutely correct. What else? Two more are there. Like with observation, we say inspection. Inquiry is correct. One more is there. Analytical procedures. Inspection, correct, Suhaira. Analytical procedure is the another one. So see, basically, when the auditor is conducting the risk assessment procedures to identify and assess the risk of material misstatement through understanding the entity and its environment under SA 315, He performs various risk assessment procedures like inquiry, observation, inspection, analytical procedures, right? Let's say he's inquiring the management and he's asking the management that, okay, management, tell me, who are your major suppliers, right? The management response to the inquiry is that our major suppliers are from, let's say, Dubai, okay? And, or let's say, let's take another example, are from Korea. Now, let's say there is a ban on the import of raw material from Korea by government, right? And auditor is aware about this. So what audit procedure has he done? He has performed one of the risk assessment procedures, which was inquiry. Now, when he got the response to this inquiry, he identifies this as one of the events which cast significant doubt on the entity's ability to continue as a going concern. Why? Because there is a ban. The company may not be able to import all its supply, and the company may not be having, any alternative, right? So he'll ask the management whether you have assessed whether the company is a going concern or not. If management says yes, we have also made an assessment, he'll discuss that assessment with the management. Okay, this is my assessment. Tell me what is your assessment and how are you going to address this? So let's say management says that, see, yes, we know that there is a ban on the supplies from Korea, but we have already explored certain, suppliers within India, right? So this is a mitigating factor, right? So when the auditor is, assessing whether there is a significant doubt with whether any event exists which may cast significant doubt about the uh, entity's ability to continue as a going concern, he'll also assess the effect of the mitigating factors, right? Let's say here in the second situation, let's say the management says, no, we haven't assessed as such, right? Then again, he'll question, see, you'll apply professional skepticism. He'll question the management. If you haven't assessed the going concern, then how come you have used the going concern basis of assumption, right? And whatever events, conditions he has identified as a significant doubt, he'll discuss the same with the management. And, professional skepticism is what will come here. Each and every event condition which, can lead to a material uncertainty about the entity's ability to continue as a going concern. Each event and condition which may cast a significant doubt about the entity's ability to continue as a going concern, throughout the audit, he needs to be alert, right? So what are we discussing here? We're discussing that when we say that auditor needs to, obtain sufficient appropriate audit evidence about the appropriateness of management's use of going concern, or he'll see whether there is any material uncertainty that exists, the auditor needs to remain alert to any event and condition that may exist, right? In your module on page number 7.17, the various events and conditions that may cast significant doubt about the entity's ability to continue as a going concern are given. Let me just take you through that. So page number 7.17. Right? So see, these are the examples of events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. So there can be financial events or conditions, there can be operating events or conditions, or there can be other events or conditions. So before, discussing these, I'm sure that you all must have done these in detail in your accounts. Have you all, are you all aware about these financial events conditions? Quickly tell me. Quickly tell me. Okay. So see, what can be, when we say that the auditor needs to be alert, what can be various events and conditions by which he can, have an idea that there is a significant doubt on the entity's ability to continue as a going concern. Let's say there is any indication of withdrawal of financial support by the creditors. What does that mean? That the company is not able to, buy anything on credit. This is a very important, event, because this shows that there is a concern about the entity's credibility among the creditors. They are not giving any material to them on credit, right? Let's say the company has any inability to pay the creditors on the due date. Again, this is what this is a event. This is a event or a condition that is casting a significant doubt on the entity's ability to continue as a going concern. There are adverse key ratios, right? Your GP ratio, your gross profit ratio, net profit ratio, everything is, adverse in negative, right? Inability of the company to comply with the terms of the loan agreements. The company is not able to, repay its interest or principal. This means what? There is some problem with the financial position of the company. And if this continues, then going concern may be in danger. Same way, certain operating conditions like loss of a major customer or key major market, key customer, franchisee, license, or principal supplier. Labor difficulties. Some labor intensive companies which cannot run without labor, let's say labor is not available. Shortage of important supply. Right? Loss of key management person without replacement. Let's say there is one person who is the mastermind behind the company and now he has gone. Let's say he has gone from the world and now there is no replacement for him. So these are the various factors where auditor needs to be alert, because he needs to see whether all these factors indicate some significant doubt with respect to the entity's ability to continue as a going concern. Other events and conditions, let's say uninsured or underinsured catastrophe when they occur. Catastrophe is what? Disasters. Tsunami is there, which is not being insured by the company, right? In any of the insurance, if you have, let's say, insured the plant and machinery, you have taken insurance against, let's say, the inventory. The reason that is mentioned in your insurance policy, you will get the company is going to get the claim only if that reason is the same, right? So uninsured or underinsured catastrophe when they occur. So if auditor finds any such thing, he needs to be alert because it may have an impact on the going concern, and then his responsibility as per SA 570 arises, right? Is it clear, everyone? Is it clear so far? Is it clear to you? Quickly tell me any doubt, anyone? So, Anil, is your doubt clear now? Anil has mentioned that going concern condition is very key matter. How should the auditor deal with this condition? So, first of all, when he's when he's performing the risk assessment procedure, he'll discuss with the management about, the various matters. There, if he finds that there is some, event or condition which may cause significant doubt, he'll be alert. He'll ask the management whether they have made assessment with respect to going concern. If not, then also he'll ask further questions. If yes, then also he'll ask further questions. And throughout the audit, if such events or conditions are there, he's going to remain alert to all these events. Okay? Furthermore, what are the responsibilities with respect to going concern? We'll discuss. But as of now, Anil, is your doubt clear? Okay. Right. Now, see, when the auditor is, let's say the auditor is now performing the audit procedures, substantive procedures, right? In order to obtain sufficient appropriate audit evidence, the first point of our objective, what is it? That he is going to obtain the sufficient appropriate audit evidence with respect to the appropriateness of management's use of going concern. First point you all have studied. Just a minute, let me just mark it. This is the first point. Okay. Now, if the auditor has to obtain sufficient appropriate audit evidence, what he can do? First of all, he'll request the management that management, please make your assessment about the entity's ability to continue as a going concern. ठीक है. He'll evaluate the management's plan of future actions. What are the future actions? What is the future budget, right? Cash flow statement, cash flow forecast. And when any such, budget or cash flow forecast is prepared, he'll see the underlying assumptions. Because see, future is what prospective, what can happen, what is going to happen, which will obviously be based on various assumptions. So we'll see the reasonability of those assumptions. Any additional fact or information that is available, he's going to consider. And last but not the least, whatever are the management's future plan of actions or feasibility of those plans, auditor is going to obtain a written representation as per SA 580, right? So abhi tak what you have done with respect to the going concern. First of all, SA 570 says that auditor needs to obtain sufficient appropriate audit evidence about the appropriateness of entities use of going concern. Then he'll see he'll assess whether any event or condition exists that may cause significant doubt on the entity's ability to continue as going concern, and then to report as per this SA 570, right? Now we saw that when the auditor was performing risk assessment procedures, certain responsibilities were there on the auditor. And now we are saying that when he's performing the further audit procedures, that is when he's actually obtaining sufficient appropriate audit evidence, plus he'll consider the mitigating factors. I hope everyone is clear about the mitigating factors. I have given you an example that let's say there is a ban on a country from which major supplies come, but then management says that we have mitigated this factor. How mitigated is removed the impact of, nullified the impact of. How? Let's say by asking for the local importers, right? So what are the auditors or local suppliers, right? So these are the various audit procedures that the auditor may perform, right? So for example, let us come to page number 7.20. So see, apart from this, whatever we had discussed, when we say that auditor may perform additional audit procedures, so on page number 7.20, some procedures are given. So the various audit procedures, right? Let's say the auditor was discussing with the management, that management, let's say auditor saw that the company is not able to meet its loan liabilities, right? The company is not paying the loan interest or the installments, right? The auditor is going to discuss with the management. So he has identified that there is an event or condition which is, which is pointing out towards the, which puts a doubt on the entity's ability to continue as a going concern, right? Now, after that, what he can do, he'll perform again what audit procedures like. Management says, no, we'll be able to do that. Based on what management has said, based on only that, he's not going to conclude. He'll perform various audit procedures like analyzing and discussing the cash flow, profit, and other relevant, forecast with the management. He'll discuss with the management, right? Analyzing and discuss the entities available interim financial statement. What are interim financial statement? You all have answered it in the last class that when we talk about interim financial statement, we are not talking about the final financial statement as at the end of the year, but the financial statement that are prepared, let's say quarterly or, half yearly, right? If any minutes of the meetings, any minutes have been held with shareholders, those charged with governance, he is going to discuss that. If with respect to any of the loan agreement or debenture, he want to see whether any interest has not been paid, whether any principal has not been paid, he'll read the terms of debentures and loan agreements, right? He'll, let's say there are any unfilled customer orders, he's going to consider as to how the entity is going to deal with that unfilled customer order. So if you just see, these are just logical points, right? If there are any borrowing facilities, he'll confirm the existence, the terms and adequacy of the borrowing facilities. Let's say he has a doubt that the company is not able to, repay its loan properly. So he'll see whether those borrowing facilities, whether those are actually valid at this point also. if, let's say any fine or any such thing has been posed by any regulatory authorities, he'll obtain and review the reports of the regulatory actions that have been taken against the company. So basically, what is he doing? He's performing the audit procedures. Why? Because he has identified certain events or conditions, okay, that according to him are casting significant doubt on the entity's ability to continue as a going concern. So he's going to consider that. Are you all clear about this also? Tell me, is it clear? Okay. Now, student, apart from this, so basically what we have done that he'll obtain sufficient appropriate audit evidence about the appropriateness of management use of going concern. And then even if management has used going concern, which is appropriate, there can be material uncertainty, right? So whether that is there or not by seeing the various financial indicators, operating indicators, or the other indicators, right? Now, OSA 570 says that, there are certain reporting requirements so far as going concern is concerned, right? So if the going concern is inappropriate, what does that mean? It means that the company has prepared the financial statements on liquidation basis, on going concern basis. However, the financial statement should have been prepared on liquidation basis. So I'll repeat it. The company has prepared the financial statement on going concern basis. However, that basis is inappropriate, that the financial statement should have been prepared on liquidation basis. So this is everything is wrong. The financial statement, the very basis of the preparation is wrong. SA 570, it says that given adverse opinion. Adverse opinion means what? That the financial statement do not reflect a true and fair view. So students, in this, in this topic, we are going to consider, or we are going to discuss the various kinds of opinions which are there in your chapter number 8 in detail. But for the purpose of this chapter, I'll explain you the various kinds of opinion. Only that much I'm going to explain, whatever is required for the purpose of understanding. In detail, chapter number 8 will come, right? So far as opinion is concerned, right? So now we are on, you can say, the last part of this essay, which says about the implications of for the auditor's report. So let's say the going concern basis is inappropriate. The financial statements are prepared on going concern basis. However, they should have been prepared on liquidation basis. He'll give an adverse opinion. Just listen to a question which I'm saying. Let's say the financial statement should not have been prepared on going concern basis. That is, the financial statement should have been prepared on liquidation basis. And the management has prepared the financial statement on liquidation basis only. जैसा करना था वैसा ही हुआ. Will the auditor give an adverse opinion in this case, considering that everything else is all okay in all material respect? One answer which is correct. Others also please reply. So the answer is no. Okay. So here the first point says that the going concern basis is inappropriate, which means that the company has prepared the financial statement on going concern basis. However, the same should have been prepared on liquidation basis. So this is so obvious that the financial statement are not, prepared in all material respect as per the applicable FRF. So the financial statement do not reflect a true and fair view. So the auditor is going to give what? Adverse opinion. Adverse. This word adverse is on negative, right? So adverse opinion is one kind of modified opinion which the auditor will give in this case. Is the first case clear to everyone? We are going to discuss more cases, but tell me, is this case clear to everyone? Okay. Then the second case says that, let's say, see, there can be two things. Either the going concern basis is appropriate or it is inappropriate. When it is inappropriate, adverse opinion. When it is appropriate, first part of the objectives is done. What were our objectives? If you just look at the objectives, there were three objectives. First is what? To obtain sufficient appropriate audit evidence about the appropriateness of management's use of going concern basis of accounting. Second is to conclude based on the audit evidence obtained whether a material uncertainty exists or not that may cast significant doubt on the entity's ability to continue as a going concern and to report in accordance with SA. So now with respect to the second, with respect to this one, okay? So the topic that we are going to discuss is this, which says that, just a minute. So let's say the going concern basis is appropriate, right? Auditor has obtained sufficient and appropriate audit evidence. So let us continue with our example. The company has prepared the financial statement on going concern basis. However, while performing risk assessment procedure, while performing additional procedures, further audit procedure, auditor finds that there is some ban, and management says that yes, we have called for some, we have actually started dealing with the local suppliers. So as such, going concern basis becomes appropriate, but yet there is what? A material uncertainty, right? So now auditor will see if the material uncertainty exists. If though going concern basis is appropriate, but if according to the auditor, the material uncertainty exists, again, there can be two things. What? The same has been adequately disclosed in the financial statement. Other can be the same has not been adequately disclosed in the financial statement. Okay? So let us now do the first part now. If the same has been adequately disclosed in the financial statement. Okay? In this case, so what is the case? Going concern basis is appropriate. Done. There is a material uncertainty. Yes. And the same has been appropriately disclosed in the financial statement. Fine. Right? So auditor is going to give a unmodified opinion, which is a clean report that the financial statement reflect a true and fair view. Okay? But now, if you remember in the last class, and in fact today also I've told you that SA 570 imposes certain responsibilities on the auditor with respect to reporting about going concern. So when there is any material uncertainty, though the management has disclosed such material uncertainty in the financial statement, auditor is going to give a separate section for that. Auditor is going to give a separate section for that in his audit report. And the name of the section will be material uncertainty relating to going concern. Very, very important. And now what is the purpose? See, the purpose is that the auditor wants to say that like he is giving an unmodified opinion that the financial statement reflected true and fair view. Why? Because going concern basis is appropriate, though material uncertainty is there, but the same has been properly disclosed in the financial statement the way it is required as per the applicable FRF, right? But the auditor wants the users of audited financial statement to look at that particular disclosure that is given by the management. So how he can do that? He'll put a separate section in his audit report. The heading will be material uncertainty related to going concern, whereby he'll mention that in note number so and so given in the financial statement, something about material uncertainty has been mentioned, right? And he'll mention that material uncertainty exists. Plus, he's also going to mention in that paragraph that my opinion, though, is not modified in this regard. He'll specifically mention that my opinion is not modified in this regard. I'll just repeat this and then I'll ask you about your query. So what we are discussing, that going concern is appropriate, though there is a material uncertainty that, exists, which casts a significant doubt on the entity's ability to continue as a going concern. Plus, adequate disclosure has been given in the financial statement. Okay? So, since everything is done as the way it is required in the applicable FRF, auditor is going to give an unmodified opinion, which is what your clean report, that is the financial statement reflected true and fair view. But since I am the auditor, I want to, draw the attention of my audited financials, of the users of the audited financial statement to that particular disclosure that is given by the management. And how is that possible? I'll insert a paragraph in my report under a separate section will be there, and the name will be material uncertainty. So please do not write MU related to GC in your exam. Okay? This is material uncertainty relating to going concern, whereby I'll draw the attention that please refer to note number so and so given by the company on page number so and so, and I'll specifically mention that there is a material uncertainty, though my opinion is not modified in this regard. Is it clear? Is it clear? So, first part, is it clear? Second ka, this part about growing concern basis being appropriate, but material uncertainty being there. Along with that, adequate disclosure being made. Is it clear to everyone? Can we proceed further? Anil, now is it clear? I'll simplify this. This is a very important part of this essay 570. Is it clear, Anil? And others also? Okay. Now, the going concern basis is appropriate. Material uncertainty exists, but here the disclosure in the financial statement has not been made. The management has not disclosed this fact in the financial statement, right? Now, see, the financial statements are prepared on going concern basis. This is appropriate. There is no problem in that. Material uncertainty exists, however, adequate disclosure has not been made. So, auditor may give, so basically, see, unmodified opinion cannot be given. Why? Because though going concern is appropriate, but there is material uncertainty which has not been disclosed. That is, some requirement of applicable FRF has not been done. So what can auditor do? He can give a qualified or adverse opinion. As per SS 705, what are these? These are basically two types of modified opinion. So one is your unmodified opinion when the auditor is giving a clean report, and the other is your modified opinion, which can be qualified, which can be adverse, or which can be disclaimer of opinion. And I'm telling you again that chapter number 8 me, you are going to study these in detail, right? But for the purpose of SA 570, just try to understand that when the going concern is appropriate, material uncertainty exists, but the adequate disclosure has not been made. The auditor may give a qualified or an adverse opinion in terms of SA 705, right? And students, when we give a qualified opinion, the auditor will, say that except for this thing, the financial statement reflected true and fair view. Okay? And when the auditor is giving an adverse opinion, he'll say that the financial statement do not reflect a true and fair view. So it depends upon what is the impact of that non-disclosure on the entire financial statement, how pervasive that misstatement is. Pervasiveness is what? The impact on the entire financial statement, right? Now, in your chapter number 8, you are going to study, students, that whenever the auditor gives any opinion, he has to give a basis of that opinion. So SA 570 says that if the auditor is giving any qualified adverse opinion, in the basis of qualified or adverse opinion paragraph, he will state again that material uncertainty exists and that financial statement do not adequately disclose that fact. So here what we were saying, that material uncertainty exists and the same has been disclosed and our opinion is not modified. Why? Because this is what you are giving an unmodified opinion. But here, when you are giving a qualified or adverse opinion, you are going to give the basis that material uncertainty exists and financial statement do not adequately disclose the fact. Right? Is it clear? Now, third case, when the management is unwilling or to make or extend the assessment, you ask the management that management make your assessment, right? Let's say neither the management nor the auditor are able to assess whether the financial statements, whether there is material uncertainty or not, right? In that case, what the auditor is going to give, see in your chapter number 8, you will see the concept of disclaimer of opinion. If some sufficient appropriate audit evidence has not been obtained and it is material, the auditor may give a qualified opinion. When is qualified opinion given? When the impact is not pervasive within the financial statement, it is not impacting the entire financial statement. And what is meant by disclaimer of opinion? So again, here auditor is going to mention that we are not able to obtain sufficient appropriate audit evidence and we cannot give our opinion. So disclaiming, auditor is not giving any opinion if the impact is pervasive on the financial statement as a whole. Okay? So he'll mention that because it is not possible for the auditor to obtain sufficient appropriate audit evidence regarding the going concern. I'll summarize then and then I'll ask for the doubts if you have any. Okay? So implications of the auditor's report, listen to me students and then you can ask me the queries if you have any. So, first of all, if the going concern basis is inappropriate, straightforward, adverse opinion, right? Second is going concern basis is appropriate, but material uncertainty exists. There can be two things. The company has adequately given the disclosure. The company has not adequately given the disclosure. When the company has adequately given the disclosure, it means everything is fine, right? So he'll give an unmodified opinion, but along with that, it is auditor's responsibility to draw the attention of the users of audited financial statement towards that particular disclosure that is given by the management. So he'll insert a separate section in his audit report by the name material uncertainty relating to going concern. And he'll mention there this is to draw the attention of the users to note number so and so in the financial statement. He'll also mention that a material uncertainty exists, but the auditor's report is not modified because of this reason. Okay? When material uncertainty exists and the same is not disclosed in the financial statement, then the auditor may give a qualified or adverse opinion in terms of SA 705. What is qualified adverse? I have told you. So basically, these are the type of modified opinion. Rest in SA 705, we are going to study this in detail in chapter number 8, right? And whenever the auditor gives an opinion, a basis of opinion paragraph is given. There he'll mention that material uncertainty exists and that the fact that the financial statement do not adequately disclose this fact, right? And the last case says that when, management is unwilling to assess the going concern, whether it is, going concern is appropriate or not, the auditor is going to give what? A qualified or disclaimer of opinion. What is meant by qualified or disclaimer of opinion? Again, SA 705, you are going to study this in detail. But it basically means the auditor is saying that he cannot give his opinion, right? Because he has not obtained sufficient appropriate audit evidence. He's disclaiming the opinion. So he'll disclaim the opinion if it is required, depending upon the pervasiveness. Otherwise, he'll give a qualified opinion. Is it clear, everyone? So this last part is really very, very important. So how you can get a question that you are considering you are, at the verge of completion of the audit, you are the auditor of ABC Limited, and during your risk assessment procedures, you found that there is some ban on the supply of raw material, the import of raw material from the country from which the company is, buying its raw material. However, the company has certain mitigating factor, but still auditor identifies it as what? One of the material uncertainty, and the same is not disclosed. So what is the course of action? So you are going to mention that. Or let's say the same has been disclosed. So what is the course of action? Is it clear, everyone? Anyone, any doubt, please let me know. So this separate section of material uncertainty relating to going concern, it will be there within the report format only that you are going to study in chapter number 8. Anil, is it clear? It will be the part of the main auditor's main audit report. Is it clear, everyone? Everyone, please reply. Are you all clear with SA 570? So when we started our discussion with SA 570, we saw that it deals with the auditor's responsibility relating to going concern. However, the primary responsibility is that of the management. And why we are considering this? Because when management is also considering the going concern is appropriate or not, it is management's judgment. And these judgment can be subjective in nature. Why? Because whether something will happen or not in future, it is in nobody's hand. It depends upon the size complexity of the entity, the going concern, right? What information is available at the time when the management is deciding about the going concern and what subsequent event happens, right? So auditor is going to, obtain sufficient appropriate audit evidence about the appropriateness of management use of going concern. He is going to assess whether material uncertainty exists and he is going to report as per this essay. However, the auditor cannot be expected to guarantee the entity's ability to continue as a going concern, right? When we talk about risk assessment procedures, so here we are saying that he'll discuss with the management. He'll ask management whether you have, assessed your appropriateness of going concern. If management says yes, then he'll discuss the identified events and conditions with the management, that how you are going to address these. Let's say management says we have not performed, then again he's going to ask the management, then why are you using going concern? He'll discuss about the various events and conditions and he'll remain alert. And we have seen alert to what conditions? This we have seen here, that these are the various examples of events or conditions that make a significant doubt on the entity's ability to continue as a going concern: financial events, operating events, or other events. Okay? Then, in order to obtain sufficient appropriate audit evidence, he can perform various procedures. Plus, he'll consider mitigating factors. Mitigating factors is what management may have any answer that yes, this is the material uncertainty, but we have an alternate to this. We have found a solution to this. Okay? He'll see the management's future plan of action, the cash flow, the additional facts, and he'll obtain written representation. And when he is assessing the future, analyzing the cash flow forecast, he'll see what are the underlying assumptions, right? And if there is any material uncertainty, then if going concern is inappropriate, adverse opinion. If going concern is appropriate and what material uncertainty exists, and the same has been duly disclosed, unmodified opinion. And plus separate section में material uncertainty related to going concern, whereby he will mention that material uncertainty exists plus opinion is not modified. Same way, if adequate disclosure is not made, qualified or adverse, plus in the basis of opinion paragraph is going to mention that material uncertainty exists plus financial statement do not adequately disclose this fact. If management is, unwilling to make or extend it as assessment about going concern, qualified or disclaimer of opinion, which will tell the users of the audited financial statement that he is unable to obtain sufficient appropriate audit evidence regarding the going concern. So with this, we have finished a very important standard on auditing, SA 570. The name is as simple as going concern. Are you all clear with this? Isha, I'll try to do that. Are you all clear? Tell me. SA 560, SA 570, is it clear to everyone? I need more. Yes, please send in your replies. Karan, Nidhi, Isha, Amit, Gayatri, Abhijit, Siva, Suhaira, Khushi Gupta. Please reply. Nisha, Gerald, Pavan, Anjum, Anil, Ankita, Deepak, Kashish, Jignesh, Soumya, Gabbar, Amrutha. Please reply. So everyone is saying yes. A number of yes. Chalo, that's good. So now we'll be starting with SF 450, which is what evaluation of misstatement identified during the audit. So can you see that whatever essays we are doing here, we are not saying that how auditor will obtain, audit evidence with respect to, let's say, inventory, or how he will perform any audit procedures. No, the auditor has completed the audit and now he's in the stage of review before finalizing the audit report. Right? So during the course of audit, while the auditor was conducting the audit, he must have, identified certain misstatements during the audit. Now he is going to evaluate them. Right? See, here we will see the evaluation of misstatements identified during audit. See, whenever auditor identifies any misstatement during the course of audit, so he must have discussed it with the management, that management, please rectify this. But there are chances, there can be situations that yes, management has rectified the identified misstatement. There can be chances that management has not rectified, so not corrected the identified misstatement. And there can be chances that certain misstatements have not been identified by the auditor also. So how to evaluate those which have been identified during the course of audit? We are going to study them in essay 450. The name of the essay is Evaluation of Misstatements Identified During the Audit. Is it clear to everyone what are we going to study in this essay 450, which is the next essay? Yes, Gerard, you are correct. So the implications on the audit report so far as going concern is given on page number 7.22 of your module. I have tried to make a simple summary for all of you in my notes. Okay? So we are now discussing what. So students, now come to essay 450. If any of your queries relating to essay 570 or 560 or earlier chapter is still left, that I can take up at the end of the session, right? So essay 450 is what? Evaluation of misstatement identified during the audit. Repeat this with me. Evaluation of misstatements identified during the audit, right? And I've told you that all these are the steps, the things that the auditor is, activities the auditor are going to do before finalizing the opinion, before forming the opinion, right? So before forming the opinion, auditor is going to evaluate the effect of identified misstatements on audit, the misstatements that he has identified, and uncorrected misstatement on financial statement after consideration of materiality. We as an auditor, we are concerned with materiality when we are conducting the audit, when we are, planning the audit, when we are performing the audit, when we are forming the opinion. What is the essay name and number with respect to materiality? Anyone? Anyone? Essay 320 is Gerald, absolutely correct. Karan, absolutely correct. I want the name also. Anyone? Any idea? अरे ऑडिट एविडेंस थोड़ी ना है. ऑडिट एविडेंस इज essay 500. What is essay 320? Materiality in planning and performing an audit. Gerald, absolutely correct, right? So when the auditor is, evaluating the effect of misstatements, he's concerned about what? Materiality. So that is why we are saying after consideration of materiality. Now, what are uncorrected misstatements? So the misstatements that the auditor has accumulated during the course of audit, but that have not been corrected. So misstatements that auditor has identified, right? He has asked the management to, let's say correct it, but the same has not been corrected. Auditor is going to see that, right? So what are the responsibility of the auditor in terms of SA 450? Again, to evaluate the effect of what? Identified misstatement on audit and uncorrected misstatement on financial statement after consideration of materiality. Okay, is it clear? And when we say that the auditor will see the accumulation of misstatement, we are basically saying that he is going to see the impact of material misstatement other than clearly trivial. What is trivial? Very less important. Clearly, which you find that, okay, 1 rupee mistake, 10 rupee mistake is very trivial. It is not material. He can ignore that. Right? Is it clear? Is it clear? So see why the auditor is considering the accumulation. Why? Again, materiality will come here. The effect of accumulated misstatement should not exceed the materiality level which is he has set for the financial statement as a whole. Okay, so that is why we are concerned with the trivial means very less performance. No, trivial does not mean performance materiality. Don't get confused. If you just look at the dictionary meaning of the term trivial, it basically means not important. Okay, so auditor is going to see the effect of misstatements which are not clearly trivial, right? Now, when there are identified misstatement, let's say he finds that the depreciation calculation is not correct, right? Or let's say he find that any debtor balance, the management is saying it should be 5 lakhs, the other party is saying it should be 6 lakhs. Any such thing is there. So first of all, auditor will determine whether because of that identified misstatement, the auditor needs to, revise the overall audit strategy and the audit plan. See, let's say the auditor has the strategy that he's going to rely on the internal control and that he's going to check the purchases on sample basis. Let's say 40% purchases he has checked. During the course of audit, he identified certain misstatements. Now, whether his audit plan, whereby he planned to check only 40% of the sales purchase transaction, whether that need to be changed, whether the overall audit strategy that he can rely on the internal control and he may do the sample checking, whether that needs to be changed, he's going to consider that, right? Why? Because see, auditor needs to be alert throughout the audit. He needs to see the nature of identified misstatement and the circumstances. Why? Because see, students, if one misstatement has been identified, there are chances that other misstatement may also exist. If one misstatement has been identified, there are chances that other misstatements may also exist. And although misstatement, all those accumulation of misstatement, they may approach the materiality level in terms of SA 530, right? So that is why we have concept of performance materiality as per SA 320. I think I said 530 or some accumulation of, this materiality level is as per SA 320, right? And when auditor finds any such misstatement, whereby he is seeing that, whether it is approaching materiality level, he will request the management to see as to what is the reason of that misstatement. Is that reason applicable to all those transactions or is it some exception? And if let's say that misstatement is applicable to all the transactions, then he is going to perform additional audit procedures. Let's say some tax rate is not appropriately calculated with respect to the employee salary. Some TDS is not appropriately deducted. So he'll ask the management what is the reason. Is it applicable to only that transaction, that salary, or is it applicable to the entire salaries register? If it is applicable to entire class of transactions, he may, perform the additional audit procedures, right? Are you able to, see? So when auditor identifies any one misstatement, that is going to have an impact, that may have an impact on the entire financial statement, his overall audit strategy, his audit plan. Some misstatements may exist which are material, but let's say that are not identified. He'll consider each and everything about those misstatements, right? Now, see, when any misstatement is identified during the course of audit, so auditor is going to communicate that to the appropriate level of management on timely basis and is going to communicate all misstatement, the accumulation of all the misstatement. If management has done, let's say any misstatement has been done on the part of the management and auditor finds that auditor has an view that maybe the management has done is intentional. Is it correct to report that misstatement to the management itself? Answer is no. So maybe to the those charged with governance, auditor is going to report. So to the appropriate level, unless it is prohibited by any law or regulation. And when auditor is communicating, so why are we saying that communicate those misstatement on a timely basis? So that auditor may request the management to correct those misstatement, right? And let's say if those misstatements are corrected on timely basis, that is going to help the management to maintain accurate books of accounts. And if accurate books of accounts are maintained, that are automatically going to, reduce the risk of material misstatement with respect to the financial statement. So for example, let's say auditor was conducting the audit on, let's say, April, in the month of, let's say, uh, in the month of December, right? The year is yet to be finished. Auditor started his audit on a continuous basis. He's checking the financial statements of the company. During the course of audit, he finds that some rate of tax is not appropriately deducted with respect to the salary. If auditor communicates such identified misstatement to the management, that is going to what? Help the management in taking rectifying measures. And then in future, the chances that the misstatement still exist, that the risk of material misstatement with respect to such statements are high, that is going to be low. Why? Because if management is been informed on a timely basis, they are going to rectify it, right? But what if management refuses that we are not going to correct this identified misstatement? So will auditor just say that, okay, I'm withdrawing from this engagement? No. Will auditor just modify his opinion? No. Auditor will obtain an understanding of the management's reason. Maybe management says that, see, with respect to this particular category of the, of the employees on which the TDS rate is so and so, these are not the employees, these are on contract basis, right? So try to understand what are the management's reason. Okay? And considering the management's reason, the management logic, the auditor is going to evaluate whether the financial statements are materially misstated. So it's going to see the impact on the financial statement as a whole. Is it clear? Is it clear? Right? Now, let's say the management says that I'm not going to rectify, I'm not going to correct the statement. Okay? So here, auditor should now reassess his materiality. Auditor should reassess his materiality. Why? Because see, when uncorrected misstatements are material, the auditor will consider, see, what is the size of that transaction? What is the very nature of that transaction? Should I, change my materiality level? Should I change my performance materiality level? Right? Also, when auditor is evaluating the effect of uncorrected misstatement, let's say during the last year also there were certain uncorrected misstatement. The impact of those uncorrected misstatement would have been there this year also. Auditor is going to consider the effect of such uncorrected misstatement also when he is evaluating the effect of uncorrected misstatement relating to the current year. Since the last year closing becomes the current year opening, if some misstatements were uncorrected last year, those would have continued to affect the opening balances also. So when he is evaluating the effect of uncorrected misstatement, he'll evaluate the effect of the uncorrected misstatement relating to the prior periods also. Okay. And last but not the least, see, he's going to communicate with those stand with governance regarding the uncorrected misstatement and what is going to be the effect on the opinion. He'll identify all material uncorrected misstatement individually. He'll request that these should be corrected, and he'll also communicate to those charged with governance the effect of the prior period. See, if management is not correcting them, that is why they have become uncorrected. Communicate them to those charged with governance. Communicate them that if these are not corrected, what impact this is going to have on the opinion. Okay? And also communicate to them separately with respect to what the effect of uncorrected misstatement of the prior period. And last but not the least, he'll request a written representation from the management or those charged with governance that they believe that the effect of uncorrected misstatement are immaterial, whether in individual or aggregate. Right? So if management is saying we are not correcting, those charged with governance is also not, correcting, then if they are doing so, it can be possible that they are saying that these are immaterial, we are not going to change them. Then take that in writing from them. and ask them to give a summary of such items which should be attached to the written representation, right? And as if you remember, I told you when we were doing essay 230 relating to audit documentation, I told you that in every essay there is a documentation requirement. Essay 230 gives you a documentation requirement, a general documentation requirement, that whenever auditor is performing any audit procedure, obtaining any audit evidence, concluding, he'll maintain an audit documentation. Essay, every essay has specific audit documentation requirement. So here essay 450 with respect to evaluation of misstatements identified during audit, what documentation is required? That any amount below which the misstatement is clearly trivial. So auditor has not considered the fact. Any material misstatement, what is the definition of that? So what is that amount below which any misstatement is trivial? All misstatements which are accumulated, plus whether these have been corrected or not. If auditor's conclusion is that the uncorrected misstatement are material, individual, and uncorrected, what is the basis of that? See, when the auditor is going to, say that the effect of identified but uncorrected misstatement that I have identified, I discuss them with the management, those charged with governance, but they have not corrected it. Whether individually or in aggregate, if these are what material, he's going to tell the basis, he's going to document the basis. Right? So this is all about your essay 450, which is what evaluation of identified misstatement. I'll just take you through this essay quickly. I will just revise it quickly and then I'll take up your queries. So basically, before forming any opinion, auditor is going to evaluate if he has identified the misstatements, what is the effect of those misstatements on audit. So it basically means when we say effect of misstatements on audit, what is the implication? What whether those misstatements are signifying that there can be other misstatements also, right? Whether the uncorrected misstatements are material or not. And what are uncorrected misstatements? Basically the misstatements that auditor has accumulated and that have not been corrected, right? If any of the misstatement is clearly trivial, auditor may ignore that, but he's going to document that again. Okay? And if some misstatements are identified, what is the impact on overall audit strategy on audit? The nature of identified misstatement, other misstatement, right? How he's considering materiality in this respect. He is going to request the management to examine what are the reason, what are the cause of the misstatement, right? Is any additional, procedure that needs to be performed? He'll communicate on timely basis at appropriate level. All misstatement will be communicated. He'll request the management to, correct those misstatements so that in future, the risk of material misstatement with respect to financial statements is less, right? If management refuses, what is the reason, right? He'll consider the reason also and the effect of accumulated misstatement on the financial statement as a whole. And last but not the least, he's going to reassess the materiality, right? Why? See, if there is any materiality, if there is any misstatement that has been identified that is material, chances are there that other misstatements also exist which he may not have identified. That is going to, have an impact on the materiality and the performance materiality also. And whether it is due to the size of the transaction or the nature of the transaction, plus the effect of prior period identified and uncorrected misstatement. Auditor is going to consider that. He's going to communicate with those charged with governance what is going to be the effect on opinion. What uncorrected misstatements are still there. What is the effect of the prior period misstatement? And last but not the least, written representation and the documentation. Is it clear, everyone? So let me just have a look at your queries. See, if the impact is such that auditor feels that the giving a true and fair opinion is not correct, he'll modify his opinion. Is it clear, Anil? Everyone, is it clear? So we have finished essay 560, 570 and 450. After the break, we'll be starting with another important essay, which is written representation. So let us do one thing. If you have any query, you can send in your queries. Uh, we will take a quick break of 10 minutes here, and after the break, we'll start with another essay, which is what? Written representation. Okay? So quick break of 10 minutes. So students, I hope you all are back after the break. If you have any query relating to essay 570, 560 or 450, please send in your queries. Otherwise, we'll start with essay 580, which is written representation, which is again, a lengthy essay and a very important essay also. So today, as such, we'll not be able to finish up with these essay, but in the next class, we'll be finishing up with this essay. Along with this, we'll be covering up essay 260 and 265. Tell me if you have any query, or shall we proceed with essay 580? Written representation. So essay 560 was about subsequent events. 570 is going concern. 50 is evaluation of misstatements identified during the audit. Okay. Tell me what is meant by the term written representation. Written representation. Acha, tell me who provides written representation to whom? Is it the auditor who is providing this, or is it the management? Who who is the provider of written representation? ठीक है, तो all of you are saying it is been provided by the management to the auditor. ठीक है. Now, tell me, is written representation an audit evidence? Is written representation an audit evidence that the auditor may use? Yes or no? So Kashish is saying yes. Others also please reply. Kashish, Khushi, Amit Ranjan, Gayatri, Karan, everyone is saying yes. Isha, absolutely correct. Now tell me, is written representation a sufficient and appropriate audit evidence? Is written representation a sufficient and appropriate audit evidence? So you may write second and your answer. So I was so sure that for second question, I'm going to get mixed replies. Some are saying yes, some are saying no. What else? Isha is saying no, Gayatri is saying no, Kashish is saying no, Gerald is saying no. Okay. Why? All those who are saying no, why? Tell me. Why is written representation not a sufficient appropriate audit evidence, though it is an audit evidence? See, students who all are saying that written representation is a sufficient appropriate audit evidence. So let's say I go to conduct the audit of ABC Limited. Now what I can do is I can ask the management to give this to me in writing, that give a written representation that all the assets are duly reflected as is required by applicable FRF. Management gives that to me in writing. Then let's say I obtain a same written representation from the management with regards to liabilities, with regards to income, with regard to expenses. So if written representation was a sufficient appropriate audit evidence, then there was no need to obtain any other audit evidence. Then though I'll just go, I'll ask the management that management give me a written representation with respect to each and every assertion that is there in the balance sheet. I'll take that from the management and I'll finish up my audit. But no. Why? Because the financial statements are prepared by management. The written representation is also given by the management. Then why I'm saying that it is an audit evidence? See, students, written representation can be used as an audit evidence. It is not a sufficient appropriate audit evidence. Not a sufficient appropriate audit evidence. I hope it is clear. Why is it an audit evidence? See, the way auditor asks management something, auditor inquires something. Responses to those inquiry are what? Evidence. But again, those are also not sufficient appropriate audit evidence. They can be used in combination with the other audit evidence. Okay? So written representation, let's say I ask the management that management, please tell me what is the total number of litigation that is going against the company? Management says 50. Okay, it gives me detail of all 50. If still I want more audit evidence, I can ask the management, and management give this to me in writing that all the litigations that are going against the company have been duly disclosed, reflected in the financial statement. Now here, I have obtained other audit evidence with respect to those 50 litigations. In addition to that, for confirming the completeness assertion, I may ask the management to provide me a written representation. Because see, if I ask you something orally, vis-a-vis, if I ask you to confirm that thing in writing, before writing and putting up your signatures, you are going to think twice or thrice. Right? Same way, when management is being asked to give something in writing, management is going to give some correct information, though that need to be verified by performing other audit evidence also, by performing other audit procedure or obtaining other audit evidence, right? So written representation as is given in SA 580, first of all, you all said it correctly. It is given by the management to the auditor. It is an audit evidence which is correct, but it is on its own, it is not a sufficient appropriate audit evidence. Is it clear, everyone? Is it clear? Tell me any doubt. Okay. Now, if we just look at the definition of the term written representation, as is given in SA 580, it says that it is a written statement. It is a written statement by management provided to the auditor. Just a minute. So it is a written statement by management provided to the auditor. Why? To confirm certain matters or to support other audit evidence. So I told you that, let's say with respect to a particular litigation, or let's say with respect to a particular debtor, I asked the management, I want to send this debtor an external confirmation. Auditor says that, see, you cannot send an external confirmation to this debtor because let's say some litigation is going against the company with respect to this debtor. So do not send this. Okay? I perform some other procedures. Along with that, I may ask the management to provide a written representation with this regard. So it will be a written statement, which is provided by the management to the auditor to support other audit evidence. Okay? And the example that I gave you, that I asked the management, that management, please give me a written representation that all the litigation has been duly disclosed in the financial statement. So again, it becomes what? A written statement by management to the auditor. Why? To confirm certain matters. So there are two things: to confirm certain matters, to support other audit evidence. Are you able to understand? To confirm certain matters. For example, for completeness assertion, written representation is the very good audit evidence that the auditor can obtain. Why? Because unless and until the management give this to the auditor in writing, that all items, all, let's say all income, all expenses, all assets, all liabilities have been considered, this thing cannot be confirmed. But apart from, let's say, apart from this, the auditor with respect to various assertion want to, support his audit evidence that he already has. So written representation can be used to confirm certain matters or to support the other audit evidence. Is the financial statement, are the financial statements that are provided by the management written representation? Obviously, no. So financial statement, the assertion, the supporting books and records, these are not written representation. Is written representation, can it be used as an audit evidence? Yes, because it is necessary information similar to responses to inquiry. So written representation are audit evidence. Management modifies or so these are. So I'll explain you this point. But written representation do not provide by themselves sufficient appropriate audit evidence, right? But now listen to me. If I ask the management, please give this to me in writing that the company is having 50 litigation. Or let's say that the company is having a litigation with this particular debtor, and management says, sorry, I cannot give this to you in writing. So absence of written representation is also an audit evidence. Why management is not giving me a written representation, right? Or let's say if, management gives a written representation which auditor finds that it is inconsistent with the other information. Is it going to have an impact on the audit? Yes, because if management, see, auditor was relying on whatever written representation management was giving, along with obtaining other audit evidence. Now, let's say after completing half of the audit, auditor realizes that the written representation that the management was giving are not correct. Will it have an impact on other written representations? Obviously, yes. Will it have an impact on the audit procedures that auditor was earlier performing? Yes, because if written representations are not correct, that means the information that is given to the auditor, maybe all the information is not correct, right? So such is the importance of written representation, though it is not sufficient appropriate audit evidence in its own, but it is a necessary audit evidence which the auditor can use. Is it clear? So SA 580 deals with the auditor's responsibility to obtain written representation from management and those charged with governance. And what are the objective of the auditor in terms of SA 580? To obtain written representation from management, those charged with governance, who are responsible for preparation of financial statement. Can I ask for a written representation from the peon of the company, from the HR department of the company with respect to the finances of the company? Obviously not. So those who are responsible for preparation of the financial statement and for the completeness of the information. To support other audit evidence, some audit evidence with respect to particular assertion, I am not having a comfort, I may obtain written representation. And to respond appropriately to the written representation. If it is provided, then also. If it is not provided, then also auditor is going to respond appropriately. So when it is provided, auditor will use it as an audit evidence. He may perform some more procedures in order to, get some more audit evidence through some other sources, right? And if it is not provided, so the way I told you that this again apply professional skepticism. Why management has refused to provide a written representation? Management has told me that there were 50 litigations. Now, when I am asking them to provide a written representation in this regard, they are not giving me the written representation. Why so? Okay, so auditor is going to consider each and every aspect when he has asked for a written representation, when the same is provided or when the same is not provided. Is it clear? So abhi we have just discussed as of now that what is written representation, who provides it to whom, for what purpose it can be provided, whether it is an audit evidence, answer is yes. Whether it is a sufficient appropriate audit evidence on its own, the answer is no. Is it clear, everyone? Any doubt, anyone? And we have done the objectives. Tell me, any doubt, everyone? Tell me, students, any doubt, anyone? Send in your queries with respect to SA 580. So clear, no doubt. Gayatri is saying clear. Kashish is saying no doubt. Gayatri is saying clear, yes. Others also please reply. More replies I need. One more clear. Students, more reply. Like I have asked you to tell me whether what is written representation and some, little information about written representation that we have discussed. Is it clear? What is the essay number without looking? Just send in the essay number. 580. What is the name? What is the essay for going concern? 570. And for subsequent events? So that means you all are actively participating in the discussion. You are actively listening to the discussions. Chalo, that's good. So I told you that you cannot just ask for a written representation, let's say from the peon of the company, or let's say the HR department. So basically, with respect to the financial statement, you are asking for the written representation. So the management who is responsible for preparation of the financial statement, and those who knows the matter concerned, from them the written representation will be requested by the auditor, right? Now, see, students, you all must have done essay 210 in your earlier chapters. Tell me, what is it all about, essay 210? Essay 210. Quickly tell me. Quickly send in your replies. Essay 210. Quickly send your replies. So it is about the terms of audit engagement, preconditions of audit, right? Now see, auditor may ask the management to provide a written representation with respect to the fact that whether management has, fulfilled its responsibility with respect to preparation of financial statement as per the applicable FRF. Yes, the financial statements have been prepared, but let's say, so this is the chapter what completion and review. The audit has been completed, and now you have understood that written representation may be obtained by the auditor for whatever, purpose that the auditor wants. He want to obtain some additional audit evidence with respect to a particular assertion, he may ask the management. He want to confirm certain matter, he may ask the management, right? Now, before the auditor is signing the audit report, what he can do is he can ask the management that management, now I'm going to finalize my audit report, but before that, give this to me in writing, give a written representation to me in writing that you have actually fulfilled your responsibility for preparation of financial statement as per applicable financial reporting framework, which you promised in terms of audit engagement. When the auditor and the client signs the engagement letter, their management responsibilities are mentioned, their auditor's responsibilities are also mentioned. So here, before signing the audit report, auditor may request the management that management, please again tell me. So in SC 210, it was what, it was basically what, that in the terms of audit engagement, the responsibilities of the management and the auditor should be clearly stated to avoid any misunderstanding. Now here under SA 580, auditor may request the management that give this to me in writing that you have actually fulfilled the responsibility which you promised earlier in the terms of audit engagement. Okay, are you all clear? And again, as I've told you that for, the information that has been provided by the management, whether that is complete or not, with respect to that, also auditor can ask for a written representation. And in fact, for obtaining a comfort with respect to completeness assertion, written representation is a very good, audit evidence, right? Now let's say when I ask the management that, let's say I ask the management that you have certain specialized kind of cranes. Okay, let's say the company is engaged in, let's say, in building of metro tracks, okay, or railway tracks, and it has certain specialized kind of machinery, the valuation of which, let's say, is done by the experts, right? Now, if I ask for a written representation in this regard, the management may mention the names of those experts whose help the management has taken, right? So such kind of written representation are also fine, whereby reference to any expert or your internal counsel is mentioned, right? Also, in the written representation, the management may use the language like, these have been prepared to the best of our knowledge and belief. This language is also, auditor can accept this, right? Is it clear? So basically what we have discussed here, first and foremost, auditor may ask the management to reconfirm. So basically to confirm that whatever financial statements have been prepared, whether you have fulfilled your responsibility of preparing them as per the applicable FRF that were promised when signing the terms of an audit engagement, please give this as a written representation. With respect to completeness of transactions, whether all information has been given, please give a written representation. Reference to any actuarial or any, expert can always be there. And qualifying language, like, to the best of our knowledge, we are giving this information. This language, auditor is also reasonable to accept all such this kind of language, right? Then, this we have discussed that why is written representation necessary. So I told you that, see, with respect to various assertions, for example, completeness, auditor cannot verify it. He can perform a number of procedures, but in order to obtain a comfort with respect to completeness assertion, written representation is a very good audit evidence. So if someone has to confirm something is writing, he's going to think twice or thrice, and he's going to think twice or thrice before giving, let's say, any incorrect information. So that is why, with respect to various things, obtaining audit evidence by, performing other procedures may not give sufficient appropriate audit evidence. Written representation will have to be obtained by the auditor. Okay? Is it clear? Is it clear? Okay. Now, let's say, let me just give you an example. Let's say you were the client and the auditor, they have entered into an engagement. A letter of engagement was signed whereby the responsibilities of the management was written and the responsibilities of the auditor was written. Okay. Now, before signing the audit report, let's say the management who signed the engagement letter has now changed. Before the signing of the audit report, the person or the management who signed the engagement letter, they have changed. Now, just think, is it mandatory now to, obtain a written representation that, see, whatever was agreed by those person with respect to fulfillment of responsibility for preparation of financial statement, whether these have been fulfilled or not? Tell me. So those who signed the audit report, the engagement letter, now let's say they have changed. So is it advisable for the auditor to definitely take a written representation from the new management before signing the audit report? Is it mandatory? Whether it should be mandatory? Answer is yes. Right? Same way, let's say you are the auditor of the company for a continuous period of 5 years. So when you are the auditor of the company for a continuous period of 5 years, every time terms of engagement will not be signed. Let's say it is signed once. Okay? And now, second year, when you are, signing the audit report, you may feel that since audit engagement terms, those were prepared in the previous year, I should get a written representation that management has fulfilled its responsibility, right? Also, let's say during the course of audit, you find that management is asking you to do your GST work also. So that means there is some misunderstanding with the management about the responsibilities and about auditor's responsibility. Again, you can ask the management that management, please give this to me in writing that you have fulfilled all your responsibilities that you acknowledged earlier. Okay. And again, in case of any change in circumstances, auditor will ask the management to provide a written representation before the report is actually signed. Is it clear? Is it clear? Tell me. If you have any doubt, please let me know. Is it clear? So many of you are saying that, ma'am, please give us an example of written representation. So before moving my discussion to, the next part, let me just show you the sample of written representation that is given in your module, and the page number is page number 7.35. So Abhi, I have left a number of parts in this. 7.35. So see, written representation is given by whom? It is given by the management to the auditor. So it is given on the letterhead of the entity, that is the client. The date will be mentioned. The date will be mentioned, right? Okay. To the auditors. These are what? The auditors. Okay. Now tell me, can this date be later than the date of audit report? Can this date be later than the date of audit report? Tell me, quickly tell me. Why? Many of you have answered it correctly. That is, you have answered no. It cannot be after the date of audit report. Why? Tell me. Why so? Yes, Isha is saying because it is audit evidence. Absolutely correct. Since a written representation is an audit evidence, and audit evidence for a particular period, audit period, cannot be obtained after the date of the audit report. Why? Because your audit report, the opinion is drawn based on your audit evidence, and written representation is an necessary audit evidence. It is a necessary audit evidence. Nahi, Abhijit, no. The reason that you have quoted it tells me that you have certain misunderstanding about the concept. See, engagement letter is signed at the start of the audit so as to avoid any confusion, whereby the responsibilities of the auditor, responsibilities of the management. What are the responsibilities of the management? To prepare the financial statement as per the applicable FRF for the design implementation of the internal control, in order to make sure that the financial statement do not contain any material misstatement. To provide the auditor with all information, additional information, unrestricted access to the persons within the entity. You all must have done this as a topic of precondition of audit, right? So all these things are mentioned in the written representation, in the engagement letter, which is signed at the start of the audit. Also, the auditor's responsibility, the scope, the objective of the audit. So basically, the purpose is what? Whatever is to be done on the part of the management, whatever is to be done on the part of the auditor, everything is mentioned, and the purpose is what? To the fees and everything is mentioned, and the purpose is what? To avoid any confusion. Okay? That is signed, duly signed, accepted, acknowledged by the management, the auditor, and now the audit starts, right? And the audit is completed. Now, before signing the audit report, what can auditor do is auditor can ask the management to provide a written representation to the auditor in writing about the fact that whatever or management's responsibility were acknowledged in terms of engagement, in letter of engagement, whatever they have acknowledged at that time, whether they have actually complied with all those responsibilities. So if you remember, I just told you the various preconditions that management is responsible for preparation of financial statement, for design implementation of internal control, for providing all information, access to additional information, access, unrestricted access to persons within the entity. So now let us see how it's written. See, have a look at the written representation letter. See, if you just have a look at this written representation letter, which is given on page number 7.35, continuing to page number 7.36 and 7.37, a major chunk of the explanation that is given in SA5, it is going to be very much clear to you. Okay? So it is given on the letterhead of the entity. From here, you can infer it is given by the management to the auditor. The date you have all told me correctly that it cannot be later than the date of the audit report. And in fact, students, when the auditor obtains a written representation with respect to whether management has fulfilled its responsibility, auditor should try that the date is as near as practicable to the date of audit report. So just before signing the audit report, auditor may take the written representation that till here the management agrees that it has fulfilled all its responsibility. Okay? And in fact, here it is mentioned. So I'll take you through these topics. Abhi, just try to see the date of written representation shall be as near as practicable, but not after the date of auditor's report on the financial statement. The written representation shall be for all financial statement and periods referred to in the auditor's report. Okay? And what is the reason why it cannot be later? So the reason that you all have told me. So what is the reason? Because written representations are necessary audit evidence, the auditor's opinion cannot be expressed and the auditor's report cannot be dated before the date of the written representation. Is it clear? Okay? Now see, what is management writing? We are on page number 7.35. This representation is provided in connection with your audit. Your is what? This letter is addressed to the auditor of financial statement for the year ended this for the purpose of expressing an opinion on whether the financial statement gives a true and fair view in accordance with the applicable accounting standards in India, right? We confirm that. So see, you have read a point that qualifying language may be used to the best of, just a minute, to the best of our knowledge and belief, having made such inquiries as were considered necessary. So such kind of language can be used, right? We have fulfilled our responsibilities for the preparation of financial statement as per the financial reporting standards. Then what all auditor is saying, the management is saying, see, that we have given you all related party transaction have been appropriately accounted for. So whatever information, whatever things the auditor wants the management to confirm, it may ask for. All subsequent events for which applicable accounting standards require adjustment have been duly disclosed. The effects of uncorrected misstatement are immaterial, both individually or in aggregate. Remember, when we were doing SA 580, in fact, I'll show you SA 450, we saw that auditor may obtain a written representation. C, that if any of the misstatement is uncorrected, it is trivial. The auditor should request, I am on page number 7.26 of your module. The auditor shall request a written representation from management and appropriate, where appropriate, those shall be governance, whether they believe that the effects of uncorrected misstatement are immaterial individually or in aggregate to the financial statement as a whole, and a summary of this shall also be included. I'll also show this to you from the notes. So, this point, written representation, right? Are you able to understand? Can you relate it with the written representation letter that is there in your module? So let us go back to that. Okay. And then see, we have provided you with access to all information, additional information, unrestricted access to the persons within the entity. Remember, I told you all these points. All transactions have been recorded. So completeness assertion, all transactions. We have discussed with you the results of our assessment. We have disclosed you all information in respect of fraud and this suspected fraud. We have discussed we have disclosed to you all information relating to allegations of fraud suspected affecting the entity. We have disclosed with you uh, all known instances of non-compliance with laws and regulations. We have disclosed with you all related party transactions. So can you see? And it has been signed by Chief Financial Officer or any such person of the entity. Are you able to understand how written representation is given? And what is the purpose? That whatever, whatever the management has acknowledged in the terms of engagement, we are confirming those. Plus, we are obtaining certain audit evidence with respect to the various assertions that may come during the course of audit, for which we need certain more evidence, that is to support other audit evidence. Apart from this, whenever there is a requirement, the auditor may ask the management that please give me a written representation in this regard also. So different representations can be taken. Right? Illustration that is given on page number 7.35. Once again, read it so that you are able to connect this with whatever is given in essay 580. Just I'll give you 1 or 2 minutes to go through it. Have a look at it. I hope you all are having your modules in front of you. And if not, I'll scroll it up. Have a look at these responsibilities. Is it clear? Please send in your queries. Send in your queries if you have any. Have a look. Ask if you have any query. So Gayatri, please elaborate on your query. Who is they in your query? See, this is a sample of written representation letter that is given. And practically also written representations are given like this one, right? Isha, is it clear? Rest, it all depends upon company to company. This is a general format. See, if management, Gayatri, if management has not followed certain procedure, like your query is not clear, but then why will management give this to the auditor in writing? That, see, we are not doing this thing. If, let's say, management is not providing a written representation, then it is what? Then it is an audit evidence. Auditor, see, absence of written representation is also an audit evidence, right? Gayatri, is your doubt clear, or is this still unresolved? If it is unresolved, then please specify in detail about your doubt. Okay, so here we have seen that with respect to these things, the auditor may obtain written representation. Also in your module, some other examples are given, right? Like this on page number 7.33. So it says that they may include representations about the following. We are on page number 7.33. So other written representations that the auditor may obtain, whether the selection and application of accounting policies are appropriate. Whether matters such as the following were relevant under applicable financial reporting framework, have been recognized, measured, presented, and disclosed in accordance with that framework. What kind of matters? Plans, intentions that may affect the carrying value calculation, classification of assets and liabilities. Liabilities, whether these are contingent and actual. So whether these are shown in P&L or these are shown as contingent liability, whether it is actually the case. Title to or control over the assets, the lien encumbrances on assets pledged as collateral. So any asset that is given as charge, okay? So let's say it is not in the physical existence of the client. It has been given as, let's say it has been given to a bank as a security. So auditor may ask for a written representation in this regard. Apart from obtaining, let's say, confirmation from the bank also, auditor may obtain this as an audit evidence. Aspects of laws, regulation, contractual agreement that may affect the financial statement, including non-compliance. If anything has not been compliant with respect to law regulations, so the auditor may obtain a written representation in this regard, right? Is it clear? Let me just have a look at the queries once again. So, see, students, whatever topic we are discussing, we have discussed in chapter number 5, 6, 7. Wherever the term auditor is being used, we are referring to the statutory auditor or the external auditor. Why are you asking me that whether you are reading all this about internal auditor? You all have done chapter number 1, 2, 3, 4. Then we started with chapter number 5, 6, 7. We have completed 5, 6, and now we are doing 7. So this, though, you must be clear that wherever it is written the term auditor, it means external auditor here. But yes, wherever the term internal is been used before auditor, there only the internal auditor has been referred to. So whatever the discussions that we have had in today's session, that is with respect to statutory auditor. Why are you? Okay. Statutory auditor. If it is a typing mistake, then it is fine. But otherwise, we are talking about the statutory auditor only. Okay. Gayatri, please tell me whether your doubt is clear. If not, please elaborate your doubt. Gayatri is saying clear. ठीक है, ठीक है, ठीक है. Now, see, whenever, the auditor wants to obtain the written representation with respect to, evaluating the judgments, the intentions that the auditor made, let's say about the estimate, any provision has been made with respect to a bad and doubtful debt. Let's say auditor wants to obtain a written representation in this regard, right? While obtaining such evidence, while evaluating the judgments and intentions of the management, the auditor will consider the entity's past history in carrying out the stated intentions. Whatever management has mentioned earlier in their written representation, whether they have actually abided by such intentions, whether they have actually, given the correct intentions. Okay? If management has chosen a particular course of action, what is the reason of that? Whether the management has the ability to pursue that specific course of action, right? So basically here we want to say that when we are evaluating any written representation, we are going to consider our experience as an auditor with respect to the management's following of the intention of what they have written in the written representation. Okay? So apart from obtaining the sufficient appropriate audit evidence through performing the various audit procedures, auditor may ask the management to provide them with the written representation. But then when we are evaluating the written representation, we are going to, consider the management's honesty, integrity, our past experience, whether management has always provided the correct written representation or not. Okay? Is it clear, everyone? Is it clear? If you have any doubt, please let me know. Otherwise, I'll move further. Quickly tell me. So, of your module, we have covered till page number 7.37, like half of the page number 7.37. Is it clear or you have any doubt? I have obtained only 3 clear. I want more clear messages or more thumbs ups from your side. Then only I'll proceed with the next topic, that is doubt as to reliability of the written representation. Quickly send in your replies. Understanding is clear, ma'am. Isha is writing. What about the learning part, Isha? Anil is saying clear. Isha, tell me what about, and others also tell me. Are you able to learn? 50%. Isha is saying. Others also, please. So she's saying 100% understanding, 50% learning. Others also, please reply like this only. So Gayatri Singh can remember the crux. Others also, please reply. So 100% basically Karan is saying clear about the understanding part, but only 40% learning done. See, students, in this chapter number 7, completion and review, apart from understanding, you need to remember various things that are given in a particular essay. So let's say if I give you a question that auditor wants to obtain written representation, I give you a case study and then I ask you, let's say the final thing that is required in the question is you are required to write a paragraph with respect to essay 580 or 570, 560 or 450. So the point is that whatever we have discussed with respect to particular essays, whatever things are discussed in particular essay, you should be able to remember all those things. So let's say if I just try to remember what is given in essay 560. Okay, this or I'll discuss essay 570 for a while. So I should be able to recall that first of all, it said what is the responsibility of the auditor, and then it said that primary responsibility is that of the management. Okay. Then we should be able to remember that there were three responsibilities, that is objectives, that is what sufficient appropriate or audit evidence regarding the appropriateness of management's use of going concern, whether whether any material uncertainty exists, and to report in accordance with the SA, right? Then risk assessment procedure under SA 315, auditor will make the assessment whether management has made the assessment or not. If yes, then what to do? If no, then what to do? Remain alert. What are the various financial events and conditions auditor needs to see? Okay. In case any additional audit procedure is to be performed for obtaining sufficient appropriate audit evidence, what is that? Okay. Then last but not the least, I should be able to recall that in SA 570, a very important topic is given, that is what implication for audit report, which is basically, you can say it is divided in 3 part or 4 part. First is where GC is inappropriate, adverse opinion. Where GC is appropriate but material uncertainty exists, 2 parts of that: adequate disclosure in financial statement, adequate disclosure not in financial statement. And the last is when management is not ready to make or extend its assessment about going concern. So this way, each and every part that we have discussed about a particular essay, you should be able to remember and recall all those points. Why? Because you may get, let's say if it is a practical based situation, you may get it from any part of the essays that we have discussed. So you cannot, leave any part of the essay saying that, okay, I'll be able to write on let's say written representation. I can write a paragraph on this, or I can write 2 pages. No. Each and every point that we have discussed, you should understand, you should remember, you should be able to, prepare. You should prepare that for your exam. You can get any question from any topic that we are discussing. Okay, is it clear? Is it clear? Are we good to go to the next topic, which is what? The doubt as to reliability of written representation. That this topic is given on page number 7.37 of your module. 7.37 of your module. Quickly tell me. Let me just have a look at the queries. Yes. So Kambir is saying, yes, ma'am, understanding is clear, but I need to study twice. Absolutely. Having understood the concept in the class, and after the class, if you just go through the module once, twice, and if you have made certain notes that whatever we discuss, you just write down the questions or that we discuss, the examples that we discuss, or maybe you have highlighted the keywords or anything like that, or you highlight the keywords while reading. I'm sure that much of your chapter is prepared at that time only. Later on, you need to invest less efforts, you need to put in less efforts and less time. Obviously, if you're going to leave it for tomorrow or maybe next week, then you need to put in more time and more efforts. Okay, is it clear? Others also please reply. Understanding and learning. What is your percentage of understanding of this chapter, whatever we have done so far, and the percentage of learning of this chapter? 1 or 2 more replies, then I'll start. Tell me. Nidhi, Karan, Isha, Amit, Gayatri, Avijit, Suhairia, Khushi, Nisha, Soumya, Ranjan, Siba, Anil. Understanding 100%, need to revise for learning it. Kashish is saying. Others also please reply 50-50. Amit Ranjan, understanding is also 50-50. Or the learning part is 50-50. Siva is saying understanding is 100%, learning is 70%, ma'am. So that's good. Others also please reply. One more reply, then I'll proceed. Need revision. ठीक है. Amit Ranjan, but you need to revise it today itself. So basically, before coming for the next session, you should have revised whatever we have done. Yes, Isha, absolutely correct. So once you have prepared a chapter, she's saying, is there a need to prepare by writing also? Yes. So once you have prepared a chapter, you have understood it, you have learned the keywords or so, whatever the preparation is required, you have done that. Try to practice by writing as many questions as you can. You have your suggested answers, you have your mock test papers, everything you have. Try to practice by writing, and see, such practice cannot happen in one day. You cannot tell yourself that okay, one day I'll sit and I'll practice 100 questions in writing. No, that is not possible. Try to make a habit of practicing in writing, like whatever topics we have covered. First of all, understanding is done in class. Before coming for the next session, you have a gap of 1 day or 2 days, and even more than that in your sessions. Try to prepare it, the entire chapter from your module. Read the module twice at least. Make your notes if you want, and then once you have prepared the chapter, take up the questions from the MTP, or your suggested answers. Just try to write your own answers, then compare them with the suggested answers. You will see that once you have practiced writing, let's say 15-20 questions, you will see that like the moment you do 21st question, you will see that while doing 21st, 22nd question, the language that is given in your suggested, you are also able to write it on your own. That language will come automatically and your confidence is going to be very, very high. Okay? Your confidence can increase. Students see your understanding is required, your learning is required, but ultimately you are going to get marks for what you are going to write on the answer sheet. So just understanding, just learning is not going to give you marks. It often happens with students that their understanding is clear for auditing and ethics subject. Their learning is also clear, but when it comes to writing the paper, they fall short of words. They tell us that, ma'am, we were blank, we were not able to start the answer. But once you keep bring this in practice, you start practicing writing the question, writing your paper is going to be very much easier, because then you will be prepared that this is the way I need to start the answer. Okay? So Isha has rightly said that the revision should be done with writing also. Is it clear to everyone? So I'm happy that many of you are saying that understanding part is 100% clear. And for learning, now you are aware that you need to read this module twice at least. And some part of your learning has already been done in the class, which is really very, very good. Okay? So the next topic that we have to do is doubt as to reliability of the written representation, point number 7. This is given on page number 7.37 of your module. Okay? Now students, see, I am conducting the audit of ABC Limited. Okay? At various points while conducting the audit, I ask the management that, let's say for external confirmation, I ask the management that, management, please let's say I want to send an external confirmation request letter to so and so debtor. Management says that since a litigation is going against this, debtor, please do not send a an external confirmation request. You may obtain the audit evidence through performing other audit procedures. Auditor performs other audit procedure, obtains certain audit evidence. Plus, auditor asks for a written representation from the management in this regard. Okay? And also during the course of audit, auditor has obtained a number of written representations from the management in this regard, right? Now, let's say auditor has a doubt regarding the reliability of a particular written representation. Let's say auditor has taken a number of written representation from the management. With respect to this particular written representation for that debtor that some litigation is going on, auditor found that the facts that are given by the management on that written representation are not correct. Tell me, as an auditor, what is going to be your future course of action in this regard? If this is the situation that you have obtained a number of written representations from the management, you have relied on them, and you found that one of the written representation, the information contained is incorrect. Is it going to have an impact on now how you are going to conduct the audit or conclude the audit? Tell me, send in your replies. So, Kashish is saying inquire the management. Nisha is saying yes, it is going to have an impact. Isha is saying yes, it is going to have an impact. Isha and Nisha both are saying yes. What else? Anyone else? Anyone else? Please reply. So see, first of all, it is going to be very shocking for me as an auditor because I have conducted the audit considering, relying, or considering the fact that the management is giving me correct written representation. I have relied upon a number of written representations so far. And now I find that one of the important written representation is not correct. Then it may cast, um, uh, I may get doubt about the reliability of the written representation that I have obtained so far. But again, straightforward, I cannot, modify my opinion. I'll discuss with the management. So the story is going to be the same. I'll discuss with the management. I'll perform other audit procedures, right? Then I may take any appropriate action. That is, if I'm not satisfied, I may go to SA 705, that is modifying my opinion. Okay? But how are we going to proceed with it? Let us just discuss. Okay? So when I say doubt as to the reliability of the written representation, so basically I mean to say that when the auditor has a doubt about the competence, integrity, honesty, or the ethical values of the management, then as an auditor, I'm going to determine the effect on the reliability of written representations and the audit evidence obtained so far. Okay? And if the written representation is inconsistent with the other audit evidence that I have obtained, okay? So I will perform what? An audit procedure may include what? I may ask the management, I may inquire the management, I may, do some more calculations if it is required, right? If the same is unresolved, still it is unresolved, I try to resolve it, it is still unresolved, I'll ask management about it. I will have concerns about the competence, integrity of the management, right? If auditor concludes that written representation are not reliable, auditor may take appropriate action, which may include what? Possible effect on the opinion in terms of SA 705. So whenever any opinion is modified, see, whenever any unmodified opinion is given, we refer to SA 700. Okay? And whenever any modified opinion is given, we refer to SA 705. Modification can be qualified, adverse, or disclaimer. Is it clear? Are you clear about this? Doubt as to reliability of the written representation, then I'm going to perform the various audit procedures to resolve the matter. If the matter is still unresolved, that is, it is having an impact on it is having concerns about the ethical value of the management. Then I'm going to consider the appropriate action, which can be in the form of modifying my opinion. Okay. I just told you that, let's say I ask the management, and management, okay, you are saying that some litigation is going on against this company with respect to this particular debtor. Please give this in writing in form of a written representation. And management says that, see, I cannot give this to you in writing. So basically, if the requested written representation is not provided, so is when there is absence of written representation, tell me, is it an audit evidence? Tell me, is it an audit evidence? Yes, everyone is saying yes. So what can I do if such is the case? I'll discuss with the management. Let me just take you through the module for this topic. Page number 7.38. Requested written representation not provided. If management does not provide the one or more of the requested written representation, the auditor shall, first of all, he shall discuss the matter with the management. He is going to discuss the matter with the management. That management, what is the matter? Why are you not giving me the written representation? Whatever management says, let's say management says, no, we cannot give. Reevaluate the integrity of the management. Evaluate its effect on the reliability of written representations and audit evidence. See, management is saying that I cannot give this written representation. Who prepared the financial statement? Auditor. Who helped the auditor obtained, perform audit procedure, obtain audit evidence? Sorry, who prepared the financial statement? It is the management. Who held auditor perform audit procedures? Let's say facilitated, provided the information to the auditor. It is the management. And now management is saying that I am not giving you written representation. So it is going to have an impact on the reliability of representations plus the audit evidence in journal. And if if auditor feels that there is some, problem with the integrity of the management, he is not able to rely on other written representation, take appropriate action, that is SC 705. He will give um, he can also give what? Disclaimer of opinion. Now, why disclaimer of opinion? Disclaimer of opinion, again, it is one of the modified opinion. And in SC 705, we are going to consider that. Disclaimer of opinion is what? Disclaimer of opinion is where the auditor is saying that he is not able to obtain sufficient appropriate audit evidence and he cannot give an opinion. See, auditor was conducting the audit based on a belief that whatever management information is giving, whatever information management is given, or whatever written representation management is given is correct. Now, it has come as a shock to the auditor that, oh, the information that the management was giving, the written representation that the management was giving was not correct. Tell me, is auditor in a position, can there be a situation that auditor is not in a position to say anything about the financial statement, whether they are true or not? Because the very basis on which he was conducting the audit, that is the integrity of the management. Now there is a doubt on this. So that is why here we are discussing about disclaimer of opinion. What is disclaimer of opinion? Is it clear to everyone? Is it clear to everyone? Any doubt about disclaimer of opinion? So the last, the last topic with respect to SA 580 is what? Disclaimer of opinion. So disclaimer of opinion is what? Let's say with respect to written representation, when can the auditor give a written disclaimer of opinion? So when there is non-reliability on the written representation about management's responsibility. He cannot rely on the written representation, or when such written representation is not provided. He's asking the management to provide a written representation, let's say about the management responsibility, and management is saying we cannot provide. So can he give his opinion? No, not at all. He'll give what? Disclaimer of opinion. Is it clear? So let me just read this from your module also, page number, it is on page number 7.39. Disclaimer of opinion. So the page number is 7.38. Disclaimer of opinion in case of non-reliability of written representation about management's responsibility of failure to provide such written representation. The auditor shall disclaim an opinion on the financial statement in terms of Essay 705. So what is meant by disclaimer of opinion? I hope everyone is clear about this. The auditor concludes that there is sufficient doubt about the integrity of the management, such that the written representation about management fulfilling its responsibility regarding preparation of financial statement and about information provided and completeness of transaction are not reliable, or management does not provide the written representation relating to fulfilling its responsibilities regarding preparation of financial statements and about information provided and completeness of transaction. So in this situation, the auditor is, he can give a disclaimer of opinion because there is no other option. The premise on which he was conducting the audit was what? That whatever management has given the information is correct. And now he finds out that that is not true, because written representation is inconsistent with some other information or some other audit evidence. Is it clear, everyone? Is it clear? Quickly go through this, test your understanding. 5. Then I'll try to conclude this. Otherwise, I'll conclude this essay in the next class. So quickly read. This is given on page number 7.39. CAR Gurumurthy is about to complete audit of a company. Before completion, he asked management to provide him a written representation confirming that management has fulfilled its responsibility regarding preparation of financial statement. He also wants management to confirm it in writing about providing of all the necessary information and completeness of transactions to him. The management feels that auditor is seeking irrelevant documents near completion of audit. Why view of management is not proper? What possible implications it may lead to? So tell me. So basically, what is the case that before completing the audit, the auditor is asking for the written representation from the management that it is fulfilled its responsibility for the preparation of financial statement, right? Plus that all information, necessary information has been given and it is provided, but management feel that it is an irrelevant exercise and it need not be done. So is the view of management proper? Answer is no. What possible implications it may lead to? Tell me. So you are on the verge of completion of audit. You cannot say the management is saying that I'm not giving you written representation that I fulfilled my responsibility. Will you accept it and give your unmodified opinion? Answer is no. So two things are asked: that why view of management is not proper, what possible implications it may lead to. So I'm waiting for your replies. So the answer is on page number 7.59. So it says that the view of management is not proper. Audit evidence obtained during the audit that management has fulfilled its responsibility regarding preparation of financial statements and about information provided and completeness of transaction is not sufficient without obtaining confirmation from management that it believes that it has fulfilled those responsibility. This is because the auditor is not able to judge solely on other audit evidence whether management has prepared and presented the financial statements and provided information to the auditor on the basis of agreed acknowledgement and understanding of this responsibility. So unless and until such written representation is obtained, this thing cannot be confirmed. In case of refusal of management to provide such an information, it may lead to disclaimer of opinion. So see, this is the way you need to write. I have received answers from you, but you know, none of your answers mention disclaimer of opinion, and none of your answers mention that without obtaining this, the auditor cannot confirm all these things, right? So your answer should be as is given in your module. Which question, Gayatri, you want me to explain? So I'll do one thing, students. I will take up this essay. I'll summarize this essay in the next class, that is essay 580. And then we will be left with two more essays from this chapter. Plus, we will be discussing a number of questions with respect to the essays that we have discussed. And Gayatri, whatever second question you are referring to, implications, that I'll take up in the next class. Okay? If you have any query with respect to essay 560, 570, 580 plus essay 450, you can send in your queries. In the next class, I'll take up. And before coming for the next class, again, a request, a reminder to all of you that you should have gone in entirety through your through all the pages of your module till page number 7.37. Okay. Thank you for being patient listener. Thank you for making this session interactive, and see you for the next session. Thank you, students. Yes, IT done. Bye.